name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Service International Limited. And here is your daily technical analysis of stock index futures. I'll start with UK FTSE futures. A second higher bullish white soldier following on from the previous session's immediate countering bullish harami. The market filled the gap 69.02 to 69.05 left over from last weekend, and thus successfully mended the bearishness left over from the big move down on Monday. Prices also punched up and closed over the next overhead resistances, and they are the March 2020 high at 68.71.5, the January high at 69.10, and the rising medium moving average currently 69.25. This decisive move higher is in contrast to the period of indecision that culminated in the fourth countering bullish piercing line pattern 2 Fridays ago. I've said last week and this week as well that I have concern about this market. Well, it might just be becoming assuaged. So far today, not that much. A higher open and a small move higher still, but back now to the medium moving average and utilising the January high as support so far. German DAX futures. A second bullish white soldier yesterday as the market continued its recovery after the big move lower on Monday. The market pushed up and closed over the significant rising medium moving average, currently 15.262, and also by the lesser projected Fibonacci line at 15.289, though I've doubts on the value of the latter one. Further overhead we have the short medium moving average, currently at 15.523. I said this last week and, well, said it this week and last week, it is all getting a bit precious now, especially after May's monthly key reversal up had seemingly been neutralized. Well, it seems the market may have breathed a new sense of bullishness again after reappraising May's monthly key reversal up. So far today, a second far higher open. Almost another gapping move higher and a further move up through the short medium moving average and the short moving average. But prices have pulled back from testing over the short moving average. Well, for now, we're in between the two of them at the moment. Next overhead is the old projected 50% projected Fibonacci line at 15.629. As I said on Tuesday, this looks like a more earnest try higher as the base of the action was on Monday's close. US E-mini S&P futures. A second bullish white soldier yesterday and a suitable follow-on higher to the previous session's immediate countering bullish harami. This continues to be a strong response to the recent bearish opening long back Mariposa. Let's one more take a step backwards on this and get a better picture of what is happening. So, 3 weeks ago we had the break upwards out of the not that distinct rising wedge pattern formed over mid-May to late June. The target on the top side for this, that is target X, is in the 44.12 area. We'd come close to reaching up towards that number, but 6 days ago we had an outside day, the lesser cousin to the key reversal, when the market had issues trying to punch up through the 43.85 area. This left a question mark on whether the market can make it up there at all. Now, last Friday it moved from being a small question mark to a medium-sized question mark. The nearby support of the 50% projected Fibonacci line at 43.43 was no longer there. The nearby support of the the upper trend line, currently at 42.98 of the rising wedge pattern, that still held. Yet this did lead it to the early July action looking like it might be a possible false break higher. Now, this past Monday was a second consecutive close below the 50% projected Fibonacci line, but more importantly, the market punched down through the upper trend line of the rising wedge pattern, as well as a short medium moving average, currently 42.59, and the significant May high of 42.38. Prices finished up closing on the short medium moving average. Now, whilst this was a big move lower, it was not as bad as some of the other stock index futures. You see here we still have had support. The medium moving average below 41.61 plus a 100% projected Fibonacci line at 42.02 and two 50% projected Fibonacci lines at 41.81 and 40.82. with the move back into the rising wedge pattern on Monday, I thought I'd also likely retire target X, at least for now. However, the strong bullish harami based on the short medium moving average and the market punching back up and out of the rising wedge pattern, plus the follow-on higher yesterday, has tempered that bearish incentive. Indeed, prices yesterday tackled, broke up through and closed over the combined short moving average, currently at 43.44, and the important 50% projected Fibonacci line at 43.43. So far today, a strong higher open once again, and maybe the beginnings of another strong attempt higher. We'll have to see. We are over just both the short moving average and the 50% projected Fibonacci line. Overhead, the lesser Fibonacci line at 43.68 remains, as does the all-time high at 43.84. French CAC 40 futures. A second bullish white soldier yesterday, and also a strong bullish white Mariposa as well. It was more than a suitable follow-on higher to the previous session's strong, immediate countering bullish harami. Below, the market had the strong support of the rising medium moving average, currently 63.13, and the 50% projected Fibonacci line at 63.48. As I've said recently, since mid-June, this market has taken a course of 2 steps down, followed by 1 step up, and then again 2 steps down, etc. I suppose this is the most recent episode of this dance. We still have in operation the breach, but still functioning, recent descending, expanding wedge pattern, with the downtrend not that far away now, overhead currently at 65.25, and the lower trend line below currently at 62.49. Now on the way up, the market filled in the weekend gap, 64.13 to 64.48, plus moved up to challenge the other 50% projected Fibonacci line at 64.80, and the flatlining short medium moving average currently at 64.83. It failed at both. Just in case we have another significant move today or on Friday, I'm still not comfortable just yet to start labeling targets for the descending expanding wedge pattern. However, I can give an idea of the size of any possible moves below or above. Move lower would be about 135 points under the confirmed breach of the lower trend line. A move higher would be about 350 points over the confirmed breach of the upper trend line, downtrend. I'll leave it at that for the moment. So far today, another higher open based on the 50% projected Fibonacci line at 64.80 and the short medium moving average, and a further move higher still, I suppose. The market is now challenging the downtrend of the possible expanding wedge pattern. Quite a significant moment considering, but it has come back off again towards that 50% projected Fibonacci line. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.